Hello, I'm Jessica Amir for the Finance News Network. Joining me from Villa World is Managing Director and CEO Craig Treasure. Craig, welcome back.
Thanks, Jessica. Great to be back again.
Thanks for coming. So first up, your FY17 results, stellar results. What were some of the highlights?
It was great to deliver another terrific outcome for our shareholders. Net profit after tax of $37.8 million, which was up 12% on the previous year. Our revenue was up to $387 million. And when we look at those results over a 4-year period, as the graphs in our presentation show, you can really see that our profit has doubled over that time and our revenue is up 70%. The same period, the earnings per share were 32.5 cents, which is a great outcome for the shareholders.
And how was the dividend?
We declared a full year dividend of 18.5 cents. The final dividend for the second half was 10.5 cents, and that gives our shareholders around an 8% fully franked yield, which is a really great outcome.
Now to sales. Can you tell us about your FY17 sales and margins?
Jessica, we delivered another great outcome with 1,207 sales for the full year period, and those sales were delivered a margin of 27%. And came from a spread of projects right across the business. Also, our joint venture and project management revenue was $5.4 million for the period, which we flagged that to be increasing for some time for shareholders, so it was great to deliver that as well.
And Craig, tell us about your market share.
Sure. We're now operating across the 3 East Coast states. Queensland is still our dominant market with close to 70% of our sales. Victoria is strong with near 30% of our sales, and we're now growing within the New South Wales market. As we've always said, we've got great customer diversity within our business. We're selling 25 to 30% of our product into the first home buyer market, around 20% into the investor market, and the balance is across the owner-occupier market, people who are upgrading and downsizing in the housing market.
Now to your project pipeline. Tell us about your established projects.
This year we've had a great range of longer-term established projects contributing to profit. So in Queensland we've had things like the Killara project at Logan, Seascape in the Redland Bay and Arundel Springs on the Gold Coast all come online, contributing well to the business. In Victoria, we've had some terrific projects running there, and Sienna projects at the Plumpton area, and also Cardinia Views down in the southeast of Melbourne. And in Sydney, we commenced our house building operations and have now been selling housing strongly in this marketplace for some time. So again, really strong projects right across the 3 states.
And in terms of the pipeline in development, what can you tell us?
Yes, we've got some exciting new launches to come in FY18 and rolling into FY19. So we've had a lot of projects that started in the last 12 months, but we have something like 8 or 9 new ones to come. And to highlight a couple of those, project at Clyde and Patterson's Road in Melbourne is really a replacement for the Cardinia Views project, and that will be coming online. And we have a new flagship project at Logan in Brisbane called Covella at the suburb of Greenbank. So they're 2 of the key ones. Plus a return to housing on the north side of the Brisbane with the Meadows project at Strathpine. So we've got some great new launches coming that will drive those sales and profits through the coming years.
A more general question now. Tell us about the operating environment.
Yeah, the markets that we operate in, Jessica, in the greenfield growth corridors of the cities have all continued to be really strong. You have to look at the things that are driving our sales, and that's first home buyer grants, low interest rates, employment. People have to feel confident about their job to buy property. We see strength in a lot of those markets across the board at the moment. There's been some incentives delivered in the form of stamp duty for first home buyers. So all of that has combined to give us good strong sales in our conditions. We see the Queensland market as strengthening. The New South Wales market is being steady, and the Victorian market is extremely strong, being driven by the population growth coming into that state.
Last question now, Craig. How does that growth flow into your FY18 guidance?
Yeah, Jessica, we're looking forward very strongly to the FY18 year. So we've been able to deliver a forecast NPAT of $41.6 million. We're also forecasting a continuation of the dividend of at least 18.5 cents per share in line with this year, and the EPS number per share will be 32.8 cents in the financial year 18. But we have given the market guidance post that into 19 as well to achieve double-digit EPS growth from 17 to 19, and that's largely flat through to 18 given the additional shares on offer after we raised equity recently. So you'll see a major step change in our business going from FY18 into FY19, which we'll be pleased to deliver that to shareholders.
Well, Craig Treasure, thank you so much for the update.
Thank you. It's great to be back, and we look forward to coming back and updating again at our half-year results.